Okay, I just wanted to make one more video here, kind of highlighting the algorithmic price movement and how that, for me, translates into trading opportunities using my day trading approach. I just made two videos kind of highlighting the overall nature of algorithmic price action, essentially highlighting two things. This is Apple, by the way, this example. This is the daily chart on how, the two things in terms of the algorithms, they're always looking to seek out liquidity levels, buy side and sell side liquidity. So this a high up here, this is buy side liquidity, this low is sell side liquidity, and price is moving towards those areas. And then they're also rebalancing some inefficient pricing. So for example, here's a gap I could see between the low of this bar and the high of this, the low of this bar and the high of this bar. There's a little gap right in here. So you can see at some point price comes in here and refills that area to rebalance it since it was inefficient on the way up, and it rebalances it back. And then the question is that hold and head higher, or is it fail and continue lower, those type of things. And I highlight that on the previous two videos. So if you watch those, you'll have a pretty good background about what I'm getting at here. So now looking at Apple, keeping in mind some of those and what it does is this whole algorithmic, nature of price movement kind of sets my expectations as to where price is heading. When I'm looking at the weekly, monthly, and daily charts, I'm seeing the various liquidity areas. I'm seeing, in a gap and balance areas. I can kind of have an idea that price is trying to head down here, as long as the, if in this case, if this is a sell side liquidity, as long as the monthly and weekly chart are pointing lower and we're heading down there, that's where I expect price to go until proven otherwise. And when I'm expecting price to head down to these levels, then I can use my day trading approach, which I really go over. There's so many videos on this channel showing the way I trade, but generally it has to do with opening price action, the pre-market range, and looking for a couple of directional moves on the day. And that's kind of what I'm doing. So if I expect price, for example, here, I could see in the month of December, we're heading lower. The monthly chart's red, the weekly chart's red. Here's the, sell side liquidity target. On these days, for example, in here, which I highlighted here on the 15-minute chart on these particular days, I could see they align with what I'm expecting to the downside. Price opens up down and continues lower. So there's a sell. And, in this case, it was a kind of a trend day. Here was another day, sell, one push down, two pushes down. That's kind of what I look for directionally, either up or down, two pushes on the day. And I kind of judge it from the open. And, that's a whole nother topic. But again, when everything, my expectations align with kind of how price opens, and that's where I trade. So obviously, then price with regard to Apple in the month of December, you can see here, let me go to the monthly chart. You can see here the month of December was red the entire month. So you're pretty much biased to the downside, and it took out this first level of liquidity down here on the weekly chart, and then it moved to its deeper level down here. And that's kind of, this was the first level here. This was this little, these lows. And then when it moved lower here, this was that area on the weekly chart back here that it finally hit. And at that point, you're at exhaustion risk and deciding whether you're going to continue a lot lower. If you look at the monthly chart back here, once you're hitting those, key low right here, if you're going to head lower, there's definitely targets down there, but you're going to have to see this January continue red. And as it turns out, January reversed. First of all, the weekly chart reversed here early in January, and then, by the night, I think this day right here was a key day, this Thursday, January 9th. That's when everything reversed to the upside, and you kind of sensed that you were, the weekly chart was heading up on a 2-up week, and now all of a sudden your expectations change to take out buy side liquidity. If you look back at the chart, there were a couple of gaps. So first of all, you can see this rectangle I put in play. That would be a first target as you're heading up to fill in this balancing, this inefficient area of price. It came up there. Look what it did once it got there. It kind of paused, so it's filling it in, but then it continued through it. And then it even tested it again, and that often happens. You can even see a little gap between the high of this bar and the low of this bar within this area. So that little pullback here, was just totally expected, given your run up to that liquidity area to these highs. And you can see price, made it all the way up to all this liquidity up here and just took it out. So now, we're in an area where do we continue higher on the bigger picture charts? And we will get into that, next week and everything everything else and see what happens. On the monthly chart, there are still targets above until conditions change. February is still green, so your bias is still to the upside until it changes. But the main thing I wanted to show you is as price is heading up here, starting on the 9th of January, your bias to the upside the entire way. My general approach, again, just the very basics, I like to be above the midpoint of the prior day and starting up. I'm looking for that kind of price action. So here on a 2-down day, for example, where you come down, even though it's a green day, I probably wouldn't be trading to the long side. This is a day that's above the midpoint higher. This day is above the midpoint higher. This day, same thing. Here's a little pullback. So that's what I'm looking for. And if you go kind of to those days just real quickly, starting on the 9th of, I'll go to the 15-minute chart here. Yeah, the 9th is where everything changed. Then it kind of closed lower. This day was below the midpoint of the prior day. I probably wouldn't have been looking to do anything. But then you can go on, each day by day. And I could see here, this is starting above the midpoint of the prior day. This would be a typical, for me, red to green kind of trade. I would have bought there, took out those pre-market highs, one pullback, and then a move up. This same thing, held above the midpoint of the prior day. So this would be a red to green kind of trade. Maybe it didn't... immediately hit those highs, but eventually it came down, did it again. So it might have been a break-even trade, but you'll see a lot of good days here where we this day started down. I don't want to get into the details of it, but let's say I wouldn't have traded that. Then you have a day here where you have a classic, up opening, green. That's a first good move of the day to take... nice gain, scale out, maybe, take a small gain on that day. There were a bunch of trend days in here. Obviously, this is an interesting day where you start up, you came up, but look at this day right here, boom, boom, boom. That's in this, that's the area we expect it to kind of pause because you're hitting a bounce area. So on this red day, that little first move after going up 3 days in a row, I would certainly have that in mind and therefore either take profits very quickly here or be very careful and maybe not even trade at all, that type of thing. So I kind of keep those things in mind. Here's a down day. I wouldn't have done anything below the midpoint of the prior day. And then from here on out, I think there were a lot of great trades in Apple. This day here, typical red to green move, would have bought it. Eventually it went up. This day started out strong, went up. So those are good trades. And again, it's all in line with now that we crossed, above this balance area and we're heading towards those highs. All these days in here, I could be trading long when they set up. And that's kind of what I just wanted to point out. That's how I kind of pull it all together, so to speak. I kind of know where price is going now. Now that we're up here and we've taken out a key high, I have to determine whether or not we're going to possibly reverse and maybe start down. I see here there are gaps. There is a liquidity down here to take out if we get red. I also see there's kind of a gap in here to fill. So if we kind of come in here and just fill this gap and don't really head lower, and even fail to take out that liquidity and then turn up, that'll be exciting for me to know that we're continuing up on the higher time frames towards maybe some of these other targets. And that's kind of the way I do it day to day. I analyze these charts in multiple time frames. I kind of know the key areas that it might be heading to. I know the balance areas where it could be meeting support and resistance and, that type of thing. Put it all together, and then I look at how price, opens each day relative to my trading plan. And, when it all aligns, that's where there's a lot of high probability opportunities. So just thought I'd film that. And again, just showing you, again, Apple, classic example of broadening out lower, hitting some key targets. And then by the beginning of the month, continuity completely flipped, and it's been up ever since. And we did reach our targets up here. So, these are the types of things you look for. And again, just wanted to shoot a video showing how it all comes together for me.